What is going on, everyone, and welcome back to Explain the Charts. Today, on October 4th, 2025, we are diving deep into Litecoin, or LTCUSD, which has been making major headlines all week. The entire market is focused on one thing: the potential approval of a spot Litecoin ETF, and the price is reacting in a big way. We're going to break down all the news surrounding this event first, and then we will jump straight into the charts to see what the technicals are telling us. First, let's get into the news because it is the primary driver of this market right now. The big story was the looming SEC decision on the Canary Litecoin ETF, which was expected around September 30th. That deadline was missed, partly due to a U.S. government shutdown and the SEC shifting its preference to filings under new generic listing standards. However, the market seems to have interpreted no rejection as a bullish signal. Prediction markets like Polymarket are showing a staggering 96% probability of a Litecoin ETF approval happening sometime in 2025. This optimism has fueled a significant rally, with Litecoin surging approximately 15 to 16% over the past week. We've also seen open interest spike to its highest level since September, reaching nearly $1 billion, alongside a wave of short liquidations, which adds fuel to the upward price pressure. Analysts are throwing out some big numbers, with some projecting a move to $122 by the end of this year, and even as high as $164 if the ETF is approved. There is also significant institutional interest, with firms like Grayscale seeing inflows and other companies integrating Litecoin into their treasury. So, the fundamental backdrop is overwhelmingly dominated by this single, massive catalyst. Now, let's see how this news translates to the price action on our daily chart. Looking at the bigger picture, Litecoin has been on a wild ride over the last year. We saw a massive run-up to the $147 level back in December of 2024, followed by another push to the $140 resistance zone in February 2025. After that peak, we saw a significant correction that brought the price all the way down to a major support area around $80 to $90 in March. The price then recovered and spent months consolidating, building a base of support in the $100 to $115 range through much of August and September. This long period of consolidation is crucial, as it often precedes a major breakout, which is exactly what we appear to be seeing now. Let's switch over to the 1-hour chart and zoom in on this recent explosive move that correlates directly with the ETF news. I'm filtering from September 27th to today to focus on this rally. As you can see, the price was trading sideways, tightly coiled around the $105 to $106 level leading up to the end of September. Then, right on October 1st, coinciding with the news of the SEC's non-decision, we saw a massive impulsive move. The price shot up from $106 to over $115 in a matter of hours on huge volume. This is a classic sign of buyers stepping in with force, reacting positively to the news. After that initial surge, we saw a brief period of consolidation before another leg up on October 2nd, pushing the price towards the $122 mark. This pattern of a strong upward impulse, followed by consolidation, is very characteristic of a healthy and powerful uptrend. Now, to get an even closer look, let's switch to the 15-minute chart for the most recent price action. Over the past 24 hours, after peaking just below $125, the price has entered another consolidation phase. We're seeing it build a range roughly between $119 and $124. This pattern could be forming a bullish flag or pennant, which are continuation patterns that often resolve to the upside. The key here is that the price is holding its gains at a high level and not giving back much of the recent rally. This shows that buyers are absorbing any selling pressure and are willing to defend these new, higher prices. A breakout above the top of this range would be a very bullish short-term signal. Let's go back to the daily chart to put it all together and define our key levels. The immediate resistance to watch is the recent high around the $125 mark. If we can break and hold above that, the next major resistance zones are between $130 and $135, which acted as a ceiling multiple times in early 2025. Above that, The major targets become the previous cycle highs around $140 and then the peak at $147. On the downside, immediate support can be found at the bottom of the current consolidation, around $119. A more significant support level is the breakout point around $115. If we lose that, the next critical zone is the long-term support base between $102 and $106, which was mentioned in the news and is a psychologically important area. The ultimate floor for the bullish case remains that $80 to $90 zone from the March lows. So, what's our outlook short and long term? The bullish scenario is currently the most probable, with about a 70% likelihood in my view, driven almost entirely by the ETF narrative. As long as the price holds above the $115 support level, the path of least resistance is upwards. A clean break above $125 would reinforce this, likely triggering another leg up to test the $130 to $135 area. The bull case would be further strengthened by any positive rumors or official updates regarding the ETF approval. The bearish scenario, which I'd place at around a 30% probability, would require a catalyst to take hold. This could be a definitive ETF rejection, a major market-wide downturn, or a technical breakdown. If the price fails to break $125 and instead falls below $119 and then $115, it would signal significant weakness. A break below $115 could lead to a quick retest of the strong support at $105. Be cautious of a potential sell the news event if the ETF is finally approved, as much of the good news may already be priced in. To recap, the key levels to watch are critical. Keep an eye on immediate resistance at $125 and major resistance at $130 to $135. For support, watch the immediate level of $119, followed by the more important zones at $115 and then $105. The main thing to look for moving forward is any news or rumor related to the SEC and the Litecoin ETF, as this will continue to be the dominant catalyst for volatility. That's our analysis for today here on Explain the Charts. If you found this helpful, please like the video and subscribe for more in-depth chart breakdowns. Remember, this is not financial advice. The crypto markets are extremely volatile, and you should always do your own research and assess your own risk tolerance before making any investment decisions. Thanks for watching, and we'll see you in the next one.